Hey, it's Andreas. I've been investing for over 10 years, and in today's video let's take a closer look at 3M stock because it popped yesterday by almost 23%, and perhaps this is the trend that will break off all the negativity that's been around this stock with litigation on forever chemicals and ear protection for veterans and many other lawsuits in the past. But who knows? We take a look at stock price over time here, and we can see that performance has indeed been lackluster. It's been on a downward spiral. Now with the new CEO here, they have some performance changes to the company. They talked about it in the quarterly earnings report. I listened in on it, and I will go through the slides today and just walk you through what's been going on with this company. So in terms of presentation, it was quite generic when the CEO talked about the business performance improvements in operations. He talked about more lean management, how certain products touched 5 different factories before finally being delivered, and how the logistics here is a hindrance to operational margins. And also talking about the R&D that's not been prioritized as a result of a lot of investments into the healthcare business. This part of the business is being spun off, so that's quite positive in this case. So perhaps we're going to see more focus on the core, more focus on R&D, and more focus on increasing sales in the future, because the total amount of revenue has indeed been lackluster for this company. We see adjusted sales here of about 6 billions, and they're talking about adjusted sales in this case because remember they made the spin-off of this healthcare part. And in real terms, if we look at the growth here, it was a negative 0.5%, but adjusted growth here 1.2%. And factor in the sky-high inflation that we've had for the past few years here, well, then this performance is just terrible. Where is the dividend increases gonna come from if the company is not growing revenue organically? They're doing some spin-off activity here. They talked a bit about potential M&A, but the impression that I got from the CEO was that he was more focused on spinning off divisions and focusing more on the core, and that was just the feeling that I got when he talked about M&A activity. Of course, they have a ton of different segments. It's very difficult to just point a finger and say this is the business because they make like 6,000 products, everything from tape to the forever chemicals that leaked out into water, causing massive litigation. But on this slide regarding operating margin and EPS, we need to be a bit careful because these lawsuits, they come up as an expense when they admit guilt. That's when it comes up, and then they pay it out over years usually, so it affects cash flow for years to come. And when I looked at the balance sheet of this stock as well, we see that the total liabilities is quite high, so there's not a whole lot of equity in this company. So this slide regarding cash flow and having cash returned to investors, we're seeing 0.4 billion paid out as dividend and then 0.4 billion as share repurchases. However, they are authorized to do a whole lot more of share repurchasing in the second half as well as in 2025. But there will be no share purchases if litigation problems continues, so there's a lot of risk baked into the stock. They made some settlements now, and I just have to make a comment here regarding something I found funny on the earnings call. He called the holdouts, the ones that weren't settled yet, for example, pointing to Europe. So Europe, the continent where I lived, it's just considered a holdout here in the case of 3M. Really goes to show what a grand scale the corporations are operating in. They're just massive. So once again, we have the different areas here: safety and industrial. Remember, I told 6,000 different products. These are the ones: transportation and electronics, consumers, and then they raised guidance as well. So this is something that caused share price to increase by a lot. Make no mistakes, just look at this earnings per share guidance from between the range of $6.8 to $7.3 a share up to current 2024 guidance 7.0 to 7.3. So this is what caused the massive pop in share price that I showed you in the beginning of this video. And then in the Q&A section, they were a bit softball towards the CEO. He was a new CEO. He's been there for 3 months, not taking any break. He has a lot of learnings to do still. He came off as very confident in the earnings call, and I think he was able to talk well around the business. He was put a bit on the spot from one of the analysts who asked him a question about the opening slide. Remember, I talked a bit about operational efficiency. I pointed out indeed that it was quite generic, and I have to agree on that. It sounds a bit like the management textbook in some cases. The only thing I didn't hear was the term jidoka, but he basically explained lean management in this case. So it will be interesting to see the execution there, to see if operational margins indeed can improve. I think that there's a lot of opportunity for that. A new CEO is a good opportunity to make changes, and changes are indeed needed for 3M. Circling back to share price here, we can see that it's been a lackluster performance as of late. The stock has had some troubles. Perhaps this is the turnaround case. Time will tell. That's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.